Weekly commentary 10. Late upload because I had problems with the storage on my laptop, but that's all sorted out now, so let's just get straight into it. So let's see where we expect the DXY. Same thing, every single week we do the same thing. Let's look at the current price action, what's happened. So we move down lower, rebalance this area, right? Turtle soup, which is a run on the liquidity, and then we move quickly higher. Think of a turtle's neck, right? If you call it turtle's neck instead of turtle soup, maybe this will help you understand it better. You know how a turtle's neck slowly comes outside of its shell and how it can go back into its shell fast? So think of when you're coming down to when you're at a liquidity pool, so you got relatively equal high or lows, yeah? Think of the turtle's neck coming outside of its shell and then go back inside. So what is it? It's just a run on liquidity and then a move back into the range and the other way. And then what did we have? We had this candle move up and we left the fair value gap from this candle's wick to this candle's close. Rebalanced that area. Not completely, but we rebalanced that area. Then we moved up higher, left a small fair value gap. And now this entire candle has been rebalanced and we're moving higher. So from the last weekly commentary, what was our targets? Our targets were these relatively equal highs in the wicks of these weekly candles. So this one, and this one. And we've traded above into it. Now, from the start of the mentorship, and even prior to starting the mentorship, I've had a bullish outlook on the DXY on the dollar. And you guys know this, right? I've said where we expect to find some small rejections, like where we expect to find a stall in price. When we come up, like when we came up into here, I said when we come up to here, it's likely we're gonna have a stall in price, not a rejection and a reversal, but a stall in price. Why? Because this is an order block, right? So it's likely that we trade into it and we retrace down, reaccumulate, and we make a move higher. And then once we've traded above this high, what was I looking at? I was looking at this fair value gap, right? And then I was looking at this high, and then we were looking at these highs. Do you see how I don't just say, yeah, I'm going for this high? You have to have your objectives one by one. Deal with what's in front of you right now. Because say you're just aiming for this high, but we know that we have to consider this rejection block. So my next draw on liquidity, where I expect the weekly candles to start going towards, is I want to see a trade inside this rejection block. And if it has the willingness to do so, ultimately trade above the high and take the buy side liquidity. You see how I don't just say I want to just trade above this high straight away. You have to consider the price arrays, right? Because we know within that rejection block we can reject and we can then retrace down, reaccumulate, and then we can move higher again to trade above the highs. Because price doesn't only move in one way. The price arrays, right? So this rejection block, what does it show? Yes, it's a rejection block and we're moving into it. But it just shows that this is likely to be a high, expect a high to be formed in the market within this rejection block because you know that it's going to offer or should offer a level of retracement or rejection as the algorithm recognizes this as a premium price array, right? It doesn't mean we're going to trade into it and reject ultimately off of it and start, you know, offering lower prices. It just means we'll see some sort of resistance there. Price could stall, consolidate to fund a bigger move upwards to ultimately take out the high, right? Okay, so looking at this next weekly candle, is it more likely to go higher or lower? If it was likely to go lower, why would you think it's going to go lower? There's nothing here to really rebalance, right? More so, we're closest to the rejection block. So it makes more sense that next week we trade higher prices into the DXY as there's no rebalancing that's needed on the downside. This is how you start to frame the week. It starts from the weekly candle, right? So if we then go into the daily, what happened on the daily? It's It's just the weekly candle just more magnified. We see if you go from this high, this low to this high, and on the 1 hour charts, 4 hour charts, these two candles they offer equal double tops, right? This is optimal trade entry, this low to this high, optimal trade entry here, and we're going to talk about the optimal trade entry in depth as well. But one thing I want to bring you guys back to before we even dive into any of the intraday stuff that happened within the week, I want to take your attention back to a free lesson, right? So let's go to the 4 hour. So fair value gap, right? This is a fair value gap, and we trade into the fair value gap, and we see rejection. We overshoot a tiny bit here. That's fine, right? Look at all the bodies of the candles, right? They're all within the fair value gap, respecting it. So this is the euro pound. Now the DXY, our bias has been bullish on it. So if our outlook on the DXY is bullish, then we are bearish on anything cross to the dollar. Euro, US dollar, GBP, US dollar, AUD, US dollar. But, I like to trade euro and the pound more because of the kill zone sessions, right? It's more volatile within the kill zone sessions. But did the euro and the pound offer the same magnitude of a move? Consider these numbers, yeah? Look at GBP USD and Euro USD. Minus 0.33, minus 1.47. The pound USD moved nearly 3 times the Euro USD. And why is that? Why do they move exactly together, right? If they're correlated and they're both cross to the dollar, why don't they move just like each other? Because of the euro pound, right? When we traded into this fair value gap, what do we expect to happen? We expect to move higher away from the fair value gap after we traded into it. Breaking this high, market structure shift, right? And we're breaking above this high now. So it's likely what's gonna happen. It's likely we're gonna offer retracements lower, and it's likely that we're gonna move higher. So why is that a big deal? Because we want to pair the weakest currency out of these two with a strong dollar. Because getting the weakest one out of these two and pairing with a strong dollar is going to give us the biggest down move. Euro against the pound. Well, clearly the euro is a stronger one against the pound because euro GBP is going up. So that means when considering the euro and the pound, the euro is the stronger one out of the pound. But which one are we interested in? The stronger one or the weaker one? The weaker one. So pound is the weaker one. So we consider the pound. That is why GBP USD moved down so aggressively in comparison to the Euro USD. The Euro USD moved down, it was more choppy and sideways in its downwards movement. GBP USD, more favorable, it offered a large move, right? Traded into this, right? This imbalance here, and then moved down. This was a free teaching I gave on the Telegram channel. And to be honest, thinking back to it, it should have never been a free lesson. It should actually been a mentorship lesson because the currency futures and using the Euro GBP to decipher whether to trade the cable or fiber, cable being GBP USD and fiber is Euro USD. I don't want you guys to overlook that, right? Whenever you're thinking of which one you should trade, you need to look at the Euro GBP. Is the Euro GBP moving up or down? Look at I know you guys are all looking at the DXY. If you're bullish on the DXY, find the weakest one out of these two and trade the pair that gives you the weakest currency. So for example, this will be GBP USD, right? Doing this is important because it's going to give you less headache in your trading. You don't want to be caught in the chop being this sideways movement. It's not favorable to be caught in that. It doesn't offer the largest, cleanest moves. Rather, when price moves like this, much more opportunities to find trades and get short. The second thing that I want to touch on in this weekly commentary, right? If I don't even know what this line is for, let me just remove that. I want you guys to consider this on the 4 hour. So let's remove these lines for the time being. From this low to this high. Change this. Now, I want you guys to not focus on this. Focus when the price is here. On the 20th of April at 7 a.m. New York time. Yeah, and we're going to match this to the Euro USD. So where was, in terms of the OTE, where was the DXY on the 20th of April at 7 a.m.? At the 50%, right? Now let's go to the Euro. Let's do the same thing. 20th of April. Okay, let's use 9 a.m. because there's no 7 a.m., right? 9 a.m. It was OTE within the 62, right? I just extend this out so you guys can see it better. The 20th of April, 9 a.m. You see that it was already OTE, but why would you not be looking for sells at this level? Although it's in this imbalance, right? Why would we not be looking for sells here? Because the DXY is our measure for the euro dollar. This is where technical analysis, right? This is where technical analysis, just copying other traders. This is where, like, just, you know, looking for patterns and not applying any logical understanding. This is where you will fall on your backside, right? Because this is only derived by logic. What I'm going to tell you, the DXY, it was not in the OTE yet. So what does that mean? Think about that. It's not OTE yet. What does that mean? It means that it still has the ability, or it still has, you know, space to move into the OTE. So even at this point, right? At this point, it's not at the 62, but the euro dollar was already past the 62 here. See, it was already nearly at the sweet spot, 70.5, right? So what does that mean? It means that the DXY still has space to move down. Now, the euro dollar is already at 62 at this point in time. So as we can move down into the optimal trade entry on the DXY, what does that mean? It means that the euro USD has way more ability to offer higher prices. And therefore, if you did not consider that, you would have got caught offside. And I said this in the free Telegram chat. I said this. You can go into my free Telegram channel and you can see what I said. I said the DXY is OTE? Nope. The Euro USD is? Yes. What does that mean? It means that the Euro USD will offer what? A deeper premium level. I said that. Before the move happened, I said that. You can go check it. Go check the times. Go check everything. And you can ask me, or if I cherry picked it, how about this? Cherry picked it, leave the mentorship, and flame me on all the social medias as a fraud. Do that. I said this before it happened, right? And this is a key thing to understand. You want them to always be in sync to each other. Knowing that the DXY had more space to run down into its OTE showed you that the Euro USD could potentially run its high because they weren't in sync at that point in time. And the reason being, is this because the euro had strength. And how do we know the euro had strength? Look at the euro pound. But if we go to GBP USD, that's optimal trade entry. This is how you blend the concepts together. Find the currency pair. We know the euro is stronger against the pound. So what's that? That means euro USD is going to offer more premiums, right? It's going to offer high level premiums than the pound USD. Matching the OTE, right? We know that at this point in time, the euro USD was already offering 62. So we know that as the DXY moves down lower, the euro USD can offer, higher premiums way past the 79. We know it can go way past. If the DXY was going to 79, 100% euro USD was running its thingy, its high on its OTE, right? Like it done here. That's a turtle soup, right? This is a rejection block, and then we move lower. But on the pound, clear OTE. Those are just small things, right, to consider. To really fine tune your analysis, these are the things that you really have to consider, right? So let's go back, let's go into the euro because there's something that I want to show you guys. So now let's go back into, so before I even do the times, what time of days am I going to do? So for Friday, the market closes at 5, but from now, what times am I going to do? You guys should know this already. Every single day, midnight, New York. Seeing me do these weekly commentaries, right? Seeing the times I delineate all the time, it should help you guys in terms of muscle memory, knowing what I'm going to do so you guys can do it yourselves as well. So this is Friday, Thursday, Wednesday, Tuesday, and Monday. So what do we see? What do we see? Let's look at the news events, right? It's not that week. It's this week, right? Boring Tuesday. Wednesday, nothing. Thursday, Friday. And what do we see on the Thursday and the Friday? This is called a power three. So it starts from here. That's an ugly color. Let's change that. I like that color. Well, I'm expecting more downside, so let's just make this box here. Accumulation, and then a manipulation, and a distribution. Now, power three, what is it? It's a it's a model that ICT teaches, right? So when you see this accumulation happening, what does the accumulation do, right? What did I teach you guys that accumulation does? What is the reason and the justification behind consolidations? It's to accumulate orders and create sentiment. Because when you're making this range, right? When you're making this range, what are you doing? You're letting, the retail and you're letting people build a narrative on if they believe price is going to go high or low. Because what happens here, you're slapping in a support and you're slapping in a support and you're slapping in resistance. Retail traders wouldn't be able to make their mind up whether to long or short this pair. Now, what is the overall narrative for the euro that we're having, or that I've had? for a long time. Lower prices on the euro, right? So do you expect the manipulation to be in line or out of line of your bias? Of course it's going to be out of line. That's the manipulation. They're trying to catch people off guard. And what do? They run the stops, right? They run the stops. It would have been even better if they ran it like up to here into this imbalance. That would have been like a sweet spot because this high now kind of lines up with these relatively equal highs here, right? You see how it's all in line with the news events. And it's a common thing. If you're going into Tuesday and it's like that, you have to kind of start to think what is going on in the market because it's not random. Remember, everything's not random in this market. The consolidation, what are we consolidating for? Is that whenever you see consolidation, right, like a long, an elonged consolidation, you have to think of yourself, is this a power of three? Because after the accumulative phase, they will manipulate it out of line of their bias and then they'll distribute it. Do you see how quick this move was? How quick this was. Let's talk about this. When I like to say, and ICT says this as well, the fast energetic move is usually the false one. And the market maker move is slow and relentless. Let's look at the DXY, for example. We've been just chopping higher and chopping higher and chopping higher. Look how long we've been chopping higher for. And every single week, everyone says, nah, the DXY is going to come down now. It's going to come down now. It's going to come down now. It has to come down now. But what do? They're just pushing it higher and higher and higher. And they're just relentless with it. But the down moves, right? The down moves, let's think of it. The down moves, what do? They excite the average trader when they see such big moves, right? Like when they see this significant move, like here, it excites traders. It makes FOMO. When you see this happening, you're just like, shit, I want to get in. I want to get in that move. But the fast move that happens out of nowhere, especially out of an accumulative phase, it is usually the manipulation that is going on. And then look at it, they bring it down, and then what? They keep it there, let them think that this is support building up. Because look, what's here? One bounce, two bounce, some consolidation in here. This is a support zone that retail will identify. And then what do? Crush through it. Offer an OTE. This is an on the 15 minute. You'll see that this is a fair value gap plus order block. And then what happens? We move down lower. This is a mitigation block, right? Just for the people that are still confused about what's a mitigation and what's a breaker. This candle, bring it out in time, this entire candle, that's a mitigation block. We move higher and then we break down lower. Now, did we move higher and break the high? No, we didn't break the high. We moved higher, failure swing, and then we broke lower. That's a mitigation. If this move up, broke the high, and then we broke the low, this becomes a breaker block. That's the difference between a mitigation and a breaker block. I want to make a Word document for you guys, like I said, and I'm going to make all these price areas. I'm going to make it in depth. After I make that Word document, there should not be any questions about chapter 2. That's how I want to make that Word document. I want to make it so in depth that there should be no questions about anything in chapter 2, really. But let's go and see how price acted in the intraday. Let's go on the 15-minute chart. So we already, with the help of hindsight, of course, we knew what we knew that we want to see lower prices, right? And we know that we were in a power three. Look, consolidation, consolidation. Especially look at this on Tuesday. It's such a tight range. There's really nothing favorable offered here, right? Bunch of liquidity resting here. Now, if you knew what I told you guys with the DXY offering that lagged discount, so Euro USD was about to run its premium, you would have anticipated this run on the high. We wouldn't know it's this high exactly, but we will anticipate that that high on the 4 hour was going to get run out by this. And what did it create when we run out the high? What was the last lesson? What was the last block that I taught you? A rejection block. And what does a rejection block usually do? The better ones, the ones that we like to trade off, what did they usually do? They run out this, right? They run out highs. So if you go here, let me just let's just mark out this high. We mark up above the high, and then what? We come down. Let's go on a 30-minute, 45, and boom. You see that how it just sends the wick above, and it comes back down. Now let's go on to 15. Sends the wick, breaks down, comes back into this candle's wick, and then we start trading down. Optimal trade entry from this high to this low here. Breakdown, right? Offers the 50% of this imbalance. You wouldn't want to take this imbalance here, right? You wouldn't expect price to trade all the way back into here, because so let's get a fib out. Like for example here, you see this little range here, yeah, like this little box here. We want to see the energetic move away from that, and we have that, and it creates a fair value gap, right? We test it and we move down. Once we test it one time here, you don't always want to see it get retested above, right? If anything, I wanted to see this candle personally get traded into. It didn't. It just left this candle from here and we move down, right? Come up, imbalance, move down, consolidation for the rest of the day, right? From 3 o'clock onwards, which is, the end, right, of the kill zones, there's nothing else after than 3 o'clock, right? Just complete sideways movement. What happens on Friday? Now, remember I told you Friday usually trades within the range, and I had a question. I think it was Ayan, yeah, Ayan. You asked me Friday is likely to come up back up into the range, right? And what did I tell you? I said, is there a news event for Friday? You checked it and you said yes. Then what did I tell you? Expect an expansionary move on Friday. Why? Because the news event is going to be some sort of driver within the market. This is how you have to piece things together. If there was no news event, no significant news event, then best bet Friday comes back and trades within the range, right? It doesn't add no expansion to that weekly range, right? There was a news event, London kill zone. Look at this. London runs up, trades down. Optimal trade entry then offered in the New York session, right? High here. One. Let's zoom into this. 1, 2, 3 candles. What is that? That's one order block. No, not just this candle. 1, 2, 3 candles, one order block. Because there are 3 consecutive up candles. There's no down candle disrupting the consecutiveness of these up close candles, right? And what do we have here? We have the fair value gap. Now, what was the last lesson I taught you guys? Order block and the fair value gap. Change of state in price delivery coupled with the fair value gap shows a true change in the state of price delivery, because we were going upwards and now clearly we are going downwards. If we were not going downwards with intent, why would we leave a fair value gap? How can you leave a fair value gap if there's no aggressive intent in moving downwards? Therefore, this is a true order block. Trade off of it, and it was crazy. This happened after I posted the video, so it was a good heads up for you guys if you did see that. and then we just trade down lower, and then there's nothing really else offered into here. On a 1 hour chart, I think it's in the mitigation and rejected within here. So let me remove this and get off rid of the clutter. In the coming chapter, we're gonna start going over the intraday teachings, right? So I'm gonna introduce you guys the aspect of time on a day-to-day basis, intraday level. I'm gonna teach you guys a few, the Asian range, the London kill zone, the New York kill zone, and when to trade them and when to not trade them is a big deal. And one thing I want to address to you guys now, and this is gonna be the end of the video. I'm just gonna start talking on a few things, right? I see you guys are active trading, and that is good. That is the best way to learn, is getting it wrong as time's going on, like live trading, forward testing, getting it wrong, asking me, and then rectifying it. But let me tell you guys, let me tell you guys something, right? Not every single day is a trading day. Clearly, Monday and Tuesday were not trading days, right? You could have got short up in here in this imbalance, right? I know some of you done that. It didn't offer much. Hopefully, you took profits, or at least put a stop to break even. But not every single day is a trading day, and you've got to realize that. And you guys aren't aware yet when some days are not trading days, because I haven't taught that to you guys yet. But if your setup is not there, don't take it, right? I've told you guys already as well. When Thursday is usually a large trading day, as Thursday usually caps the range. If Friday has no news event, don't trade the Friday. There's not going to be nothing for it. Let Monday show you which way it's trying to build the range. Is it going lower and then going higher? Is it going higher then going lower? How is Monday influencing the start of that weekly expansion on the weekly time frame, right? These are all things that are important, all things to consider. Not every single day is a trading day. And now, in terms of back testing, the only things you guys should have back tested for now are the chapter 2 price arrays. You don't even know the time of days yet to trade. You don't know how to blend the time of days, and that's fine. I get it. It's good that you guys are eager. That's sick. Trust me, that's good. That's what's needed, and that's what I want from you guys. Before I offered this mentorship, I said if you guys aren't serious, don't even bother. Don't think that this is gonna be I can watch it one time and I can become a trader. I told you guys it's not that, and you guys aren't that, and I'm grateful for that because it's less headache for me. But what you guys need to do is the way right now you guys should be backtesting is always backtest with your bias. Because the thing is, right, if you're not considering your bias, like we're in a bearish market right now for the Euro USD, and then you're trying to backtest the breakers, but you're taking bullish breakers, what what sense does that make? You know that's gonna get traded through. It's a bearish market. I've said it time and time again. Bullish price arrays in a bearish market get disrespected. Vice versa for a bullish market. Bearish will get disrespected. Your backtesting has to be in line with your bias. The backtesting doesn't give you a free pass of, yeah, let me just look at one time frame. No, I'll tell you exactly what you guys should be doing, right? Have your bias for the day, and this is backtesting. You can cherry pick it, yeah. Pick 5 down close days. 1, 2, 3, 4, 5. Find any 5 down close days, yeah. Box off that candle, right? On the daily, you'll box off that candle so that you have just that days of price action. And then see how a bearish day trades. And this there's no one else that's saying this stuff, honestly, especially on our crypto Twitter community. There's no one else that's saying this. They're all just gonna tell you backtest the model, find a static model, yeah, in past time, which is so stupid. That's so dumb. You don't realize how dumb that is. Yeah, know what your model looks like, that's fine. But just purely going into that model, learn how a bearish day trades. Learn it. In a bearish day, what time of day made the high of the day? Go do it for 10 days. Do it for 10 days. Find 10 bearish days, yeah, and tell me where the high of the day was made on those bearish days. I'll tell you, when you collect your data, The majority of the time that is made from 2 a.m. to 5 a.m. New York UTC minus 4 time that I've hit in the London Open kill zone. That is where the high of the day, usually for a bearish day, is made. And then in that bearish day, see how we are rejecting off of the bearish price arrays on the intraday level within the 5 minute and the 15 minute. And do this over and over and over again. And do the same for the bullish days. And then you'll start to make a muscle memory and your eyes will start to see what time of day, remember, because what I told you guys, time and price. What time of day to expect the move, and the price aspect is the price arrays to be looking to trade off of within a bearish day. Because every model is gonna have some, it's gonna, one model does not look the same all the time. Remember, the model is not what it looks like, it's the characteristics of the model. So for example, a run higher, and then so a market structure shift and an OTE back into the market structure shift where it happened from, right? Is that going to look the same all the time? No, the market structure shift might look different. Some market structure shifts are clear, some are just, some are vague. They just break the low by a little bit and it has you second guessing, is this a market structure shift? Some market structure shifts leave an imbalance, some don't. If you're just going off, if you just have a picture of what your trade setup looks like, you can, okay, you're in for a rude awakening, because the chances of that exact trade setup to look exactly like that, highly unlikely. The same characteristics though, running a high, running a low, OTE into that price range, those characteristics can happen. Does it look the same all the time? No, it don't. These are the things you got to consider, right? When you're backtesting, backtest how price is delivering through the day. Don't backtest a static model. Of course, the price arrays that you see that you like to trade off of. Some of you like breakers. I know Charlie likes his breakers. I know other people like the imbalance, like dots. I know people like rejection blocks. I think it was Matt. That's exactly what it is. I'm not molding you guys into trading one way, right? The way I trade, you might not like it. I'm teaching you all the price arrays for a reason. You might like one price array, your friend might like another. That's fine. That's trading. It's what's comfortable for you. But one thing all of you are trading is the price delivery, right? Some of you might have liked to trade within this rejection block. Some of you might have went into this imbalance. Some of you might have waited for OTE. Some of you might have waited to trade back into this order block. That's fine. Don't look at someone else. If your trading plan didn't offer a setup, but your friends did because you have a slight variance in the way you trade, do not jump from your trading plan because there'll be times where you get the trade and he might hit stop. It was just his day that day, not your day. Don't get lost by looking at other people's success and other people's trading plans. This game is personal. Your trading plan, completely personal. Trust me. Don't go to these guys that offer you a static model. If you see this, if you see, okay, I'll give you an example, right? Okay, wait, I need to use the path, right? Some, oh crap. If you don't see this exactly play out, don't take the trade. Okay, all right, cool. How many times do you think you're going to see this exactly in the market? But all it is a run on liquidity and then running the other side of the liquidity. That's the characteristics. Don't look at what it looks like as the picture. That's dumb. Don't do that. Look at the characteristics of the trading model. And then you have to be able to identify the trading model's characteristics in the given time and in the environment, because that picture will not, those characteristics will not always look the same. We're all humans, right? We all have eyes, we all have noses, we all have ears, lips, hair, arms, legs, torso, right? Do we all look the same? We don't look the same, right? Yeah, some people fairly look the same, but there are people that look very that if you go meet someone right now on the street, chances are they don't look anything like you. But they're a human because the characteristics are there, right? Same thing. That's the point I'm making. I'm still working on that psychological that series. It's gonna be more of a psychological slash motivational thing because I want to get some points across to you guys that are outside of technical analysis, and it's more of the development thing. It's more of like this, like how I done the end of this weekly commentary. Some of you guys might have turned it off already. That's fine. If you're just in it for the trading, that's fine. But don't say that I didn't give the advice that I have given because you turned it off, right? It's gonna be like this, me talking obviously about past experiences, how I would have went about it a different way if I could, some regrets I had, what I would do if I could rectify them, how would I rectify them, what I wish I'd done more of, what I wish I did less of, things like that. But anyway, I don't want my computer to run out of space out of any like randomly again. So let's call this one the weekly commentary 10. Until next time, take care of yourselves, guys.